Welcome back to the channel, guys. I thought it'd be good to do a kind of almost battle royale a little bit, have a bit of fun looking at IncomeShares versus YieldMax over a 160-day time period from a total returns perspective. So that's between 1st of July 2025 to the 15th of October 2025. Both of them are popular options income ETFs against underlying assets. So I just wanted to see who comes out on top, the underlier, IncomeShares or YieldMax. And I also wanted to talk about the performance since the strategy change, obviously, that has been deployed by IncomeShares. We obviously know they've struggled in the past. And so I thought it'd be a bit of a fun exercise to go through each of their tickers and see how they've performed overall. So when we look at the overall performance so far in terms of the underlying, has won out 11 times with an average return of 21%. If we look at IncomeShares, it came in second with 8 wins and an average total return of 19.38%. And YieldMax didn't come out ahead on any of them now bear in mind this is during this 3 to 4 month time period with an average total return of 15.75%. So the total returns were still good within the YieldMax portfolio. There just weren't any outright wins against the other two. And now we'll just take into account the top asset winners and the top asset losers. Now this is looking at total returns. This is including the underlying's return, just to look at which assets have actually performed quite well. So we can see AMD has done really well during this period, 75%. Tesla's done 53%. Alibaba has done 45%. And the worst performers is MicroStrategy at 26%, Coinbase at negative 6.5%, and Amazon at negative 2.22%. Again, the top three, AMD, Tesla, Alibaba, and then the worst performing would be MicroStrategy, Coinbase, and Amazon. So let's start to dive into the kind of real kind of detail of this all now. So if we start off with, now these are ranked in the order of the top winners and losers. So we're starting off with AMD, and we can see here the overall winner was the underlying asset at 75.3%. YieldMax actually came in second with 59.79%, and then closely behind that was IncomeShares at 56.78%. So again, the two income products are fairly close there in terms of their performance, but as we'd expect, the underlying outperformed both of them in this instant. Next one, if we look at Tesla, again, we can see for Tesla that the overall winner in this case was IncomeShares at 53.18% return. YieldMax did 37.38% and the underlying did 44.71%. So in this case, IncomeShares actually outperformed the underlying asset during this period. Now, obviously, bearing in mind that IncomeShares' new strategy means they hold 25% of Tesla as raw Tesla, and then the options are run on 75%. So we can see why there is a potential for them to outperform, because they're able to capture the full upside in that 25%, and they're also able to run the option strategy, whereas YieldMax doesn't have that 25% uncapped. So we have to bear that in mind in terms of the strategy difference. If we now look at Alibaba, we know the underlying asset did well at 45.57%. IncomeShares did 24% and YieldMax did almost 31%. So here is a good example of where YieldMax has done considerably better than IncomeShares during this time period, but the underlying asset has still won out in this instant. Silver. Now, although YieldMax does have the silver miners, I've kept it fairly clean just for the kind of the purposes of the comparison here. The underlying, typically when it comes to the commodities, the underlying is pretty much always going to win. We've got 43.85% and IncomeShares at almost 41%. So you can see it's actually very close. They've done really well to be able to get a very similar total return to the underlying asset or the underlying commodity. And I think that's good to see the potential of that. I think the exciting thing for me is seeing potential leverage on these products, because I can imagine even if you had 25% leverage, we could potentially see outperformance on the commodities potentially. If we look at Alphabet next, again, we have got the underlying asset winning out at 42.89%, YieldMax at 33.72%, and IncomeShares at 38.18%. So again, fairly close between IncomeShares and YieldMax there, and the underlying which is great to see. And we're seeing that with depending on the volatility of the underlying, how well they're keeping close to that underlying. We can see where that is. If we look at Palantir next, the underlying asset, again, has been the winner at 37.45%. And YieldMax and IncomeShares are fairly close here. YieldMax at 26.21% and IncomeShares at 27.21%. So not much in it. When we look at Broadcom, now again, there's only two players here. IncomeShares, the underlying asset. And here we've actually seen IncomeShares outperform the underlying asset. So IncomeShares has done 35.83% versus the underlying asset at 32.94%. If we look at gold next, again, no great surprise. Gold's been on quite the run and it's done 25.41%. And even IncomeShares has achieved over that period 22.91%. So again, good total returns on both fronts. If we look at NVIDIA next, here we've got IncomeShares actually coming out on top here at 21.82%, YieldMax 14.74%, and the underlying asset 17.31%. It's good to kind of see YieldMax is also keeping quite close to the underlying asset there, but clearly that uncapped portion from IncomeShares is helping them edge out here potentially. If we look at Apple next, we've obviously got the underlying asset here outperforming all of the three at 20.12%. We then have YieldMax at 14.72% and IncomeShares at 11.67%. So here we can see YieldMax has actually outperformed IncomeShares on a total return perspective from this period. Now, if we look at the Mag 7 basket, I've included three players here. I've ignored any underliers because there's no direct underlier per se benchmark to compare against here. So I've gone with IncomeShares, YieldMax, and the Roundhill Mag 7 fund. And we can actually see IncomeShares has done the best at 18.57%. Next comes YieldMax at 14.3%. And Roundhill's is slightly underwhelming at around 8% from a total returns perspective. So that's a little bit disappointing to see. If we now look at the Invesco QQQ, again, I've kept it just to the IncomeShares comparison against the Qs. And we can actually see that despite what we all get fearful of in terms of the zero DT and the aggressive nature of the time decay, they've actually done a fairly good job of keeping close to the underlying here. So here, the underlying's done 10% in that period, 10.2%, and IncomeShares has done 7.15%, which isn't that bad. If we look at Microsoft next, we can actually see that, again, IncomeShares has come out on top here at 7.99%, 8%. YieldMax at 4.5%, and the underlying asset around 4.5% as well. So, again, YieldMax has done as well as the underlying, and IncomeShares has doubled both, which is impressive. Again, I'm not sure whether this is this combination of this uncapped 25% plus the income on top that's really helping them. So any of those whipsaw actions on any of these stocks, they're not getting as hampered by as they were before. So it seems like the new strategy so far is showing and paying dividends. If we look at the S&P 500 now, naturally the underlying's just about winning out here, 7.97%. But again, IncomeShares 7.72%, that's impressive. It's keeping fairly close to the underlying asset from a total returns perspective. And bearing in mind, this is obviously total return, so this is obviously coming out in the form of income for the total return. So this is quite good because we wouldn't always, as investors, retail investors, always sell at the best of times. So this is quite a good indicator. If we now look at Meta, this is quite an interesting one. So IncomeShares is up 5%, leading the pack. YieldMax around 2%, but the underlying asset is actually down 0.16%. So both YieldMax and IncomeShares are outperforming the underlying here. If we now look at TLT, the Treasury fund, the underlying asset is doing around 4% and IncomeShares is doing 3.34%. Now, again, there's not much between the underlying asset and IncomeShares there in terms of total return. If we look at Amazon next, the actual winner here is actually IncomeShares, which is the only one that's positive for Amazon during this period. So 1.37%, YieldMax negative 0.68%, and the underlying asset is actually down 2.22%. So both IncomeShares and YieldMax again are outperforming the underlying asset. If we now next move to Coinbase, we've got the underlying asset doing 0.29%, so it's winning the race. We then have IncomeShares at 0.12%, and then YieldMax is really performing poorly at 6.51%. But it's again good to see IncomeShares is fairly close to the underlying asset. Everyone's been making comments how poor Coinbase performance has been, but it's the performance of the underlying asset that's key here. And we can see that across the board, right? Where the underlying asset is performing well, the income that's coming from it is also doing well. If we look at MicroStrategy next, again, another example of where the underlyings perform badly. Now, this is an interesting one. So underlying asset is down at 19.46%. IncomeShares is doing the best at negative 15.5%. And YieldMax is down by quite a bit, 26.28%. So we can see when the underlying asset is down or not performing very well, YieldMax seems to take an extra hit, which is not something I would have anticipated because of the nature of normally the cover call strategy. So I've been interested to find out what's going on there. But this is only a short time period. This is only 4-month time period. So things can change over a longer time period, of course. Let's move on now to the kind of final takeaway. The analysis shows that while the underlying asset often provides the highest returns in a kind of strong bull market, income-generating ETFs like the IncomeShares can offer compelling outperformance in flat or volatile markets. The YieldMax products also tended to show more volatility, capturing more of the upside in some cases, but also more downside like others like MicroStrategy, as we've just seen. Now, none of this constitutes as financial advice. Obviously, past performance does not indicate future performance. The data that I've just gone through is from July the 1st, 2025 to October the 15th, 2025. Let me know in the comments whether you thought this video was useful, and if you want me to do more of these types of videos. I did one on the other YieldMax European fund YMAP the other day. So hopefully you're finding these useful, guys. Thanks to the 100% Club for getting to the end again. Let me know your thoughts in the comments below on what your thinking is on these funds, and I'll catch you on the next one.